Well, it's been quite a week already in the ag commodity trade. I'm Marlon Bowling with you, your tour guide to the ag trade. And on the grain markets, we actually opened up the corn with a little bit of a firmer stance this morning. Let's take a look at where we now are trading. Well, after trading about 3.5 cents higher in the early going, we have slid back just a little bit here now. We have that May contract on the corn, now quoted at 348.5 per bushel. It's basically about a penny off of our low of the range, but the range is not all that wide today. We're up a penny and a quarter. July now a penny and a quarter higher at 353.25. And a lot of folks watching this December new crop contract now. It's decision time. They're trying to figure out if they want to keep the corn acres they originally intended to plant or if they want to switch to something else. We're going to get that prospective planning report next week on the 31st, the end of the month. Right now, December up a penny and three quarters, and we're at 367. Now, on the other hand, you look at our soybean trade, and soybeans had quite a sell-off early yesterday, but they kind of rebounded by the end of the session. So right now they're treading water with the May contract just unchanged at 886.75, and you have July now a penny and a quarter higher. It's interesting on the soybean market where you have the most strength showing up in the new crop months. And now you have November trading 4.5 higher at 879.5. Not necessarily a bullish technical sign when you have the back end leading like that. Now, we've been talking about the soy meal and the soy oil trade here for quite some time. And this morning we actually had a sale of soybean oil, and we'll get to that in a second. Soy meal is trading higher with the exception of the nearby May contract. So the May is down $1.80 now at 330.30 per ton, and July is now up 70 cents. Now here you have the deferred contract showing the most strength again, and August up $2.90 at 318.70 per ton. Now on the soybean oil, let's see how they're trading this morning. We had an overnight sale of 20,000 tons of soybean oil to South Korea, and yet we have the market actually going down. We have the May contract down 18 points at 26.37 per hundredweight. The Malaysian palm oil market had been trading higher for the fourth day in a row up to this point. Let's look at wheat, and in Chicago wheat right now, you have the May contract over there trading 8 higher. So here we go again, 569.5 is now our last trade there, 13 cents off our earlier low this morning. On the Kansas City market, we currently have that May contract now trading 2 higher at 492.75. In the Minneapolis trade so far today, we now have that May contract there 4 higher at 538.75 after a weaker start today. We have Brian Hoops on the line. He joins us from Midwest Market Solutions in Springfield, Missouri. So the overnight sales didn't seem to help that soy oil trade this morning, Brian. Any thoughts on why?
It didn't really affect it too much. You know, it was pretty minor as far as the amount, and trade kind of just shrugged it off. The corn market, I think got a little bit of support, but this was pretty widely rumored yesterday that China was in the market for about 250,000 metric tons of corn. So we may actually see another sale again tomorrow. I think everybody assumes that unknown destination eventually will be changed over to China because they're the ones that were looking for some product out of the Gulf of Mexico.
Now, on the wheat markets here, we have a sharp turnaround after kind of a weaker start this morning. What does that tell you? And the nearbys are the strongest.
Yeah, exactly. This market here, started off a little bit firmer here, starting to give back some of those gains here. But, you look at the May Chicago wheat, it has a huge inverse over the July contract, and that is because we have really tight stocks, and there is a little bit of a squeeze for some wheat. There's been some demand as far as the world markets go. I think we'll kind of replenish those stocks once we get into the new crop marketing year. We're going to have a little bit bigger supplies in the U.S. It looks like our crop is going to be larger than what was earlier expected. And then you look at the Russian wheat crop, they're going to have their second largest of all time when they start harvesting. But that'll overtake our exports, and that'll be maybe in the last half of 2020 when that really starts to affect us.
Okay, well, we'll come back here in a moment, and we'll take a look at our livestock trade. Didn't open like most of the analysts thought it would this morning, so we'll see how it's holding up when we come back. So we're talking with Brian Hoops of Midwest Market Solutions right now. And Brian, I was looking at the stock market earlier, the Dow, and it had been several hundred points higher in the late overnight trade, the futures, and then this morning after the open. But now I see where it's turning lower a little bit. And I just wanted to take a look and see if that is impacting our livestock trade. We had sharp gains the last couple of days in cattle. Let's see where we are now. On the live cattle board, well, this is interesting. April now 252 higher at 108.67, but everything else has now turned lower. June down 23, August down 78 at 97.47. October and December rather, down $1.50 and down $2.45 respectively. Well, on the feeder cattle trade, let's take a look at how it's doing. We have the March up 70 cents, but the April down 2.10 now at 127.97. May is down 2.08. August and September over $3 lower. Wow, what a turnaround there. We've had about a $7 swing already in that August. On the lean hog trade, currently you have the April contract 27 lower at 66.15. The May down 85 at 65.03. That's exactly $2 off its earlier high this morning. Brian, what happened here in the last few minutes to sell off the livestock trade like it did? I thought we were going to be coasting higher this week.
Yeah, kind of that was the thought. We would be moving higher, trying to align the futures market with the cash, and it looks like cash is going to be close to 120. So we may not be done going up yet just because we're down today. It looks to me like we're seeing a huge amount of profit-taking type activity. We opened higher, but not a gap higher opening, and that, I think, was a signal to just go ahead and move to the sidelines, see if we could get a pullback and buy in. And I think we had kind of a flash crash this morning and touched limit down. So it's been a very wild trade, and now we're starting to come back. We're well off session lows in the cattle market. But I do feel that we're going to continue to move higher. We do need to line ourselves up closer to the cash markets. So I think we're seeing kind of a reaction to the stock market being down and the crude oil turning lower, but it's more of just profit taking, and we'll see higher prices later this week or next week.
All right, it does make one wonder. It seems like things are already starting to maybe stabilize a little bit after that hard sell-off we saw just a little bit ago in that cattle market. So can't wait to see what it shows next time we check. Thank you, Brian, for talking with us. I appreciate it very, very much. Brian Hoops of Midwest Market Solutions in Springfield, Missouri. Janet, back to you.